Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Global financial markets are showing nerves ahead of tomorrow's US CPI data. Not only because there is upside risks that will restrain the US Fed from rate cuts, but also gun-shy after getting non-farm payrolls reports they basically didn't believe. Sanitized US data is a risk no one wants, other than the White House, of course. First, in the US, there were 248,000 initial jobless claims last week, a small decrease, but the one explained by seasonal factors. There are now 2.215 million people on these benefits, more than the 2.19 million in the same week a year ago. And American existing home sales came in sharply lower in January than the good December level. They ran at a 4.4% lower rate than January 2025, even lower than the unusually low January 2024 level. They fell everywhere and was the largest fall in 4 years, although prices rose marginally from a year ago. The New York Fed released a detailed review of who pays the Trump tariff taxes, and surprise, surprise, they found it is almost exclusively, that's 90%, Americans who pay. Who knew? They also found that after these tariffs, China's share of US imports is basically unchanged. Some people are slow learners. Tariff taxes are a tax on yourself, but you have to take stage 1 economics to learn this stuff. In India, they released CPI inflation data overnight and it came in at 2.75%, their highest since May. And we should also probably note that protests in India are growing against their recently agreed free trade deal with the US. In China, their Spring Festival, Chinese New Year, formally starts on Tuesday, and a lot depends on the consumer spending patterns during this 2-week annual break. Forward bookings for travel indicated a record level of travel, a sharp jump in international travel, and a preference for independent non-package holidays. Thailand, Russia, Turkey and the Philippines are getting outsized bookings this year. Separately, China has rolled back its steep tariffs penalty on EU dairy products. In Australia, consumer inflation expectations rose in February to 5%. This follows a 7-month period of below 5% expectations. The increase in February is present across a number of inflation expectation measures. And global container freight rates were little changed last week to be 38% lower than year-ago levels. Once again, the key change was weaker outbound China rates. Although shifting in between, bulk cargo rates are essentially unchanged from a week ago. The US Treasury 10-year yield is now just over 4.11% and down 6 basis points from yesterday in a hard shift to safety. And the price of gold will start today down $122 from yesterday at $4,953 an ounce. Silver's down a very sharp $8 at $76 an ounce, and even more volatility there. American oil prices are down $2, just over $63 a barrel, when the international Brent price is now just under $68 a barrel. And the Kiwi dollar is down a minor 10 basis points against the US dollar from yesterday, now just over 60.5 US cents. Against the Aussie, though, we're up 20 basis points at 85.2 Australian cents. We are down against the yen, but against the euro, we're unchanged at 51 euro cents. That all means our trade-weighted index starts today also little changed, still at 63.9. And the Bitcoin price starts today at $66,288 and up 0.5% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.7%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.